Hello everyone, welcome to Just Invest Today. And in today's video, I want to talk about actually investing when there's maximum pessimism in the market. Doing the opposite of what everyone else is doing to make big returns. But the one key factor in doing that is that you have to be right. You just don't invest with maximum pessimism just because the stock price is down like 50%, 60%. You still have to be right. So you just can't go in that direction because the stock price is down. You have to have a thesis why this stock market or why this stock is going to recover. Just think about what happened when Charlie Munger and Warren Buffett was buying Washington Post, when they were buying Wells Fargo at cheap prices during market crashes, man. So when stock market crashes, this provides so much opportunity because you got to think about all the pessimism in the market. That is a key aspect in this type of investing. So what I want to do, because this video got me thinking a lot, the value after hours, where Jake Taylor is an amazing investor, amazing thinker. So in this podcast, he talks about where do your investment returns come from? And this had me thinking a lot because with this market, we are not gonna, everyone expects 10%, 15% returns into the future at this point. And we know how crazy the stock market is right now, how hard it's getting to invest, how there's so much money in the market. Do we really think everyone is just gonna average 10 to 15% into the future in the S&P? Because 10 years ago, we just got probably really lucky. It's just a huge tailwind for investments. So in this video, he talks about where do returns come from. And I just want to talk about how to invest in this market, because if you really want to make the big returns, in my opinion, you're going to have to do the opposite of what everyone else is doing. But if you want to make maybe 8 to 7, it might be even lower 10 years from now because we're starting at a higher base in the market. We're going to have to do the opposite of what everyone else is doing. So that's going to be my base point for this argument in this video. But before we really get into that, guys, can you please like this video, subscribe to my channel? I'm always providing guys with so much new content. So like this video, subscribe to this channel. Jake Taylor basically talks about where do your returns come? So when we think about that, our returns come from multiple expansion, increased sales, profit margins, share buybacks, and dividends. So that's all going to be, so that's what's going to generate our high returns in the company. So if you're talking about like Tesla, it's starting from a high place. Like, what's the multiple expansion from this point? Like, it's crazy, 173 PE. Like, yes, they can improve margins, they can improve sales, maybe share buybacks, I don't know. But they're going to have to do a lot of sales and then a lot of improvement in gross margins, because that's where the returns are going to come from, because I just can't see the multiple expanding or them doing more share buybacks. We need to buy stocks that people are just kind of counting out. They're not really liking. The sentiment is bad because we see these huge multiple expansions, and that's going to be because the sales is growing, their margins are improving, they're buying back more shares, etc., right? So that's how we get these huge returns. So let's talk about it. The S&P 500 during the whole pandemic, look what happened, 30%. Remember when people were saying don't buy stocks or the whole pandemic is going to have a huge effect on stocks and people were running out of the market? That was the perfect time to buy. Look, 104% over that time period if you bought back in March 2020. So remember, doing the opposite of what people are saying is going to pay dividends into the future. Let's go to another example, because you have to remember about the Chandler Brothers. The Chandler Brothers averaged 36% compounded annual growth rate for 20 years. They turned 10 million of family money into 5 billion. Look at the best times they invested. It's just astonishing of what they did and how they made their money. The Hong Kong property crisis, 70% down from its peak. Look what they did, 1987 into 1991, and that's where they sold. So this is how you make your returns. The Brazilian market, when there was maximum pessimism, the government was doing some scheme. Look how they invested in 1991 to 1993. They just sold at the top. because there was maximum pessimism until they got to the till they got to pretty much fair value or kind of going over to overvalued. But with doing this strategy, you're gonna have to be tough. Like, that's gonna be the one thing. It's all about your mentality and how you think about the market. So this is not for everyone. Facebook. Look at this huge decline in Facebook. What is it? 35%, man. It's at a 14 PE, which is crazy. So if you think Facebook is dealing with a long-term problem, then don't invest in Facebook. But I think it's a short-term problem. And they have growth in Oculus. People are saying, oh, they're just wasting money. I don't believe that. They have growth in Oculus. They're starting WhatsApp Pay. They have Facebook Marketplace, which is under-monetized in my opinion. And they said they're going to fix this problem with the whole advertising. Like, they're going to fix it. So I think it's a short-term problem as they get better with AI. Like, and they have a huge network. It's like, where else are you going to go if you can't monetize or use ads on Facebook? Include when it comes to social media. Social media people are not going to run to Google to advertise or run to YouTube to advertise. Like, that's not going to happen in my opinion. Like, I doubt that's just going to be a max exodus from Facebook. Just because their ads are not hitting as much, which I think over time it's going to get better. As they said, they're using more AI intelligence to figure out how to get better ads. So I think that's going to recover. Then we go to Baba. Baba has crashed, what, 65%? Like, think about that. Huge crash. So if you think Baba's value creation is going to get better over time, it's a perfect time to invest. But not investment advice, but you have to do the opposite of what people are saying is happening in the market. Let's get to a kind of controversial topic. I know it's going to be controversial. People are not going to like this, whatever. But even the Russian market, look at this dip, 71%, and this is just an ETF, right? So we understand what's happening in Russia, Ukraine. I know people are saying that, oh, like, we don't want to give money to the Russians, which I totally agree. I respect it. But I'm just saying, is there a price where it gets too low? Like, what if this becomes $1 and you can make 40 extra money in like 5 years? Are you saying you're just going to avoid it completely? I know they're doing bad things, I understand. But think about this too. Should we not invest in the US too? Look what happens in the US. Remember, Obama had the most drone strikes ever in presidential history. Like, people in Afghanistan innocent civilians have been getting killed in Afghanistan for forever, but no one really talks about it. Look at this. This has happened in 2021. Newly classified video shows U.S. killing 10 civilians in drone strike, 7 children. This was last year. No one talks about it. Everyone's like, invest in U.S. I might not invest in U.S. anymore because when you really look into this, you know how many innocent people U.S. killed in this Afghanistan war or Yemen. Like, a lot of these places, like, U.S. has done bad things, man. But everyone looks a blind eye to that. So I understand where you're coming from. Or even China. China people are like, don't invest in China, right? They've done all these bad things in the Uyghurs, but people are buying iPhones. People are buying TVs from China. People are just like investing money. Like, people don't know what side to stand on. So I understand if you have morals, you have all these aspects that you don't want to go into. But man, are you telling me if this market gets to $1 a share, like, I will invest in this Russian ETF because commodities are booming. If it gets to $5, $4, $3 and you can make 40 extra money, are you telling me you're going to avoid that opportunity? I doubt it, right? Let's go to the ETF of China. It has crashed, what, 61%. 61% we're talking about. Look at the companies in the China market. Baidu, NetEasy, JD, Alibaba, NIO, Trip.com, Lu Motors, ZTO Express. Like, are you telling me these companies in 5 to 10 years are going to be awful? They're going to do bad things. They're not going to recover. You see what I'm saying? So this is what I'm talking about in this video, is investing when there's maximum pessimism in the market. Because if you think you can make 15, 20%, investing in Tesla stock and all these companies at the highest multiples it's ever been, and you think that's going to go higher 5-10 years from now? It could be, but what do you think is going to be at a better advantage to you, buying these prices where these companies have been getting killed? If you still believe in the thesis of these companies, you don't just invest in contrarian, you don't have in contrarian investments just because they're contrarian. You invest because you think what people are thinking about the company is wrong, right? So that's when you truly invest in these companies. So tell me what you think, because I made the most money during the whole March pandemic, and that's how you make your money. So I'm thinking I'm going to make a lot of money during this whole Chinese market sell-off as well. In 4 to 5 years, I think I'm going to come out on top. But who knows? That's not guaranteed. I might fail. Who knows what happens? But tell me what you think about this video. Investing when there's max pessimism to make the biggest returns of your life, man. So guys, please like this video, subscribe to my channel, and I'll get back to you in the next video. Peace.